Welcome. Today I'd like to review several management strategies that are associated with the human resource frame. As Bowman and Deal note, when individuals find meaning and satisfaction in their work, they and their organizations benefit. When the fit between people and the organization is poor, then they may withdraw, resist, and rebel, and consequently the organizations are less productive. Progressive corporations, university, and school districts that enact long-term human resource policies and put into place practices that strengthen the bond between individuals and the organization tend to thrive. Some strategies include paying well, ensuring job security, promoting from within, sharing benefits, and supporting these shifts with extensive training. Other approaches include participation, job enrichment, teaming, egalitarianism, and ensuring workforce diversity. Evidence suggests that ideas and practices grounded in human resource theories and organizational development strategies often play a significant role in supporting organizational adaptation and enhancing productivity. We will discuss several of these strategies in greater detail and then look at their impact on companies that are seeking to adapt to new environmental conditions and increase productivity. For example, Google offers its employees up to $8,000 a year in tuition reimbursement. On-site perks include medical and dental facilities, oil change, bike repair, valet parking, free washers and dryers, and free breakfasts, 11 gourmet restaurants on site, unlimited sick leave, 27 days of paid time off after 1 year employment, and other benefits as well. Consequently, they get good people, they keep them, and they are building a great company. This table summarizes basic human resource strategies that link HR principles to specific practices. We'll discuss these 6 principles, including building and implementing an HR strategy, hiring the right people, keeping them, investing in them, empowering them, and promoting diversity, as well as specific practices. As we've noted previously, corporations benefit from having a talented, motivated, and loyal workforce. These type of workers are productive, innovative, committed to getting the job done, and less likely to jump ship if they get a better offer. Developing a public and explicit human resource management philosophy and translating it into management systems and practices is a basic characteristic of effective organizations. Federal Express is a good example. Their credo of "take care of your people and they'll take care of the company" was not a hollow philosophy. It was translated into a foundational belief that linked people, service, and productivity. Subordinates evaluated managers on a leadership index annually about whether managers listened to their ideas. Subpar managers were evaluated again in 6 months, and if the collective index fell below standard, the top 300 managers in FedEx lost their bonuses. Hiring the right people matters. Strong companies know the kinds of people they want, hire them, and put them on the right seats on the bus. And they also know that they'll get results. For example, Southwest Airlines is looking for positive attitudes, interpersonal skills, and a sense of humor. Enterprise Rent-A-Car are looking for people with people skills rather than book smarts. Microsoft looks for people with intelligence or smartness. And Google, they're looking for people with smartness and teamwork. Hiring the right people that fit your organization's needs will avoid future personnel problems, avoid turnover, and will enhance its efficiency and effectiveness. Retaining good employees is crucial. Here are several strategies that work. Reward well. To get the people they want, companies like Google and Southwest Airlines offer attractive pay, benefits, protect their jobs in turbulent times, and promote from within to build loyalty and commitment, as well as give people a piece of the action. High turnover is expensive when you factor in costs associated with recruiting, hiring, training, and inefficiency such as error that comes with inexperience. Protect jobs. Although this may not be possible in all cases, company loyalty to their employees can be highly beneficial, as in the case of Best Buy, Publix, and Lincoln Electric. Promote from within. Costco, 80%, and FedEx, 90%. They promote from within. Employees invest in upgrading their skills, and it's a powerful performance incentive. It builds trusts, inspires loyalty, capitalizes on knowledge and skills of veteran employees, and reduces errors and stimulates long-term thinking and problem solving. Share the wealth. When companies give employees a stake in the organization's success, they have a vested interest in efficiency and profitability. Building an ownership culture may include gain sharing, profit sharing, and employee stock ownership plans that embraces notions of sharing financial data, participation in decision-making, team building, cross-training, and protecting employee jobs. Pfeffer notes that Mazda's top 10 salespeople were former factory floor workers who could explain their product to customers and then translate their ideas into better products. Invest in employees. In a highly competitive global economy, people who have knowledge and skills are an organization's greatest asset. Poorly trained and uneducated employees are costly in terms of poor product quality, poor service, higher production costs, and mistakes. Although many companies are reluctant to invest in developing human capital, making a long-term investment in employee training and mentoring is essential as it pays large dividends to their bottom line, profits. Create opportunities for development. Waterman found that Motorola gained $29 for every dollar it invested in sales training. In addition, Carnot Metal Box, a French corporation, the third largest packaging company in the world, puts great emphasis on creating a learning organization and believes in work-embedded learning. A corollary to this is when university, school district administrators, and principals make these long-term investments. Students' academic performance increases, that's their bottom line. Empower employees. Progressive organizations empower employees and invest in their development by making information available, encouraging autonomy and participation, redesigning work, fostering teams, and promoting egalitarianism and giving work meaning. Transparent or open book management signals that the organization trusts people, encourages them to make contributions, and gives them information needed to do a better job. Here are 5 ways that a manager or a leader can empower employees, including 1. Provide information and support. 2. Increase autonomy and participation. 3. Redesign work in terms of job enrichment. 4. Develop self-managing teams. And 5. Promote egalitarianism in the workplace. Let's discuss each of these in greater detail. 1. Provide information and support. Over the past 2 decades, open book management has taken root in many progressive corporations. For example, at SRC Holdings, employees understand financial and organizational performance measures, as well as understand what the numbers mean. They are encouraged to think like owners and contribute to the organization's success, and everyone has a stake in the company's success. This approach not only sends a clear signal that management trusts workers, but also creates a powerful incentive for them to contribute. When they are able to see the big picture and see how their work contributes to the bottom line, they will use information to do a better job. It's a win-win situation. 2. increase autonomy and participation. Work itself needs to offer autonomy, the opportunity to influence work, and provide intrinsic rewards. However, managers continue to embrace Theory X approaches that assumes managers make decisions and workers follow orders. As corporations recognize the cost of low motivation on productivity, they increased participation. The outcomes were often remarkable, as in the early stages of the classic toy factory case, Escardio in Venezuela. Studies of industries across several sectors, including steel, apparel, and medical instruments, found participation consistently associated with higher performance. Researchers suggest that participation improves productivity by 1. Increasing effectiveness of individual workers, and 2. Enhancing organizational learning. Barriers to participation include recognizing that changing one part of the organization may require changing other parts, the difficulty in designing participatory systems, managers' ambivalence or their lack of committedness, managers' fear that employees will misuse it, in other words, they don't have any trust in employees, and managers' manipulation. You make the decision so long as it's what I want. All of these contradictions may guarantee failure. 3. Redesign work, job enrichment. The pursuit of organizational efficiency has contributed to diminishing the human element, including de-skilling education by making instruction teacher-proof or outsourcing jobs. These industrial-era concepts alienated workers. However, observations by Bamforth on effective work groups in the Yorkshire coal mines, as well as that of Emery and Trist, Herzberg, and Hackman, link job enrichment to productivity. For example, Hackman and Ullman extended Herzberg's work and identified 3 critical factors to job redesign. First, workers want to see their work as meaningful and view it as a whole, not piecework. 2, they want to exercise their discretion and use their judgment and feel personally accountable for their results. And 3, they want feedback so they can improve their work. Here's the point. Researchers have found that redesigning work that emphasizes job enrichment has a greater impact on quality than on productivity, as well as on enhancing worker satisfaction. In other words, they get more satisfaction from doing good work than just doing more work or getting more pay. Here's a strategy. In retrospect, managers and leaders need to move away from narrow industrial concepts of restructuring, such as tinkering towards utopia that Larry Cuban coined about superintendent and school district restructuring. They not only need to redesign work so it fits new demands, but also create more supportive work environments that make a clear distinction between maintenance and motivation factors. During the past several decades, there's been a gradual shift away from manufacturing jobs, characterized as being routine and dreary. These repetitive and unchallenging jobs, in many cases, have been automated using machines and computers. Despite these advances, managers must still deal with people. Here's some barriers to redesign. Assumption that jobs need to be redesigned around technical imperatives to achieve cost efficiencies. Workers produce more in a Theory X environment. Altering jobs requires investment in machinery and plants. Job enrichment leads to pressures for system-wide changes. In these scenarios, workers have a higher opinion of themselves and may demand more from the organization than managers are willing to give. 4. Develop self-managing teams. From its inception, the socio-technical systems perspective has emphasized a close relationship between work redesign and teamwork. For example, Likert observed that an organizational chart should not depict a hierarchy of jobs, but a set of individually effective yet interconnected teams. In Likkert's view, individuals serve as linking pins. For example, Whole Foods, a Texas-based grocery chain, adopted the team approach and published its Declaration of Interdependence on its website. Each store has 10 self-managing teams, and team leaders from each store make up another team. In addition, store leaders in each region and the company's 6 regional vice presidents make up another team. The team model and a peer review system places a high value on learning from one another as a way to enhance performance. The central idea of the autonomous team concept gives groups responsibility for meaningful work, resources to accomplish it, and accountability for results. The team concept requires training, group skills, and a broader range of technical skills to understand and perform someone else's job. In other words, cross-training. Pay for skills motivates people to keep expanding their range of competencies. 5. Promote egalitarianism. Egalitarianism implies participatory management and is more about the climate than about sharing power. Although managers still make key decisions, in the United States they have persistently resisted organizational democracy as they fear losing power and prerogatives. Other nations have placed a high priority on worker participation in decision-making, including Norway, Sweden, and Israel. International corporations, including Nucor, a United States company, Semco, Brazil, as well as Toyota, Japan, and Volvo, Sweden, have benefited from egalitarian policies. Benefits include higher worker morale, increased production in the long term, and recognition that it is an irrevocable process. In other words, once you do it, workers won't give it up. The barriers include managers are afraid that workers will gain power, and trade unions oppose it because they will lose power over workers. 6. Promote diversity. A good workplace is serious about treating everybody equitably and promoting diversity. Highly effective corporations, universities, and school districts promote diversity not because it's the law, but because it's the right thing to do, and they want to make their organizations a good place for everyone to work. When these policies are in place, organizations can tap a rich and talented pool of employees, attract potential customers, recruit students, and link them with important segments of the community. Here are several reality checks. Presently, more than 1/3 of the nation's population is non-white. Demographic projections indicate that by 2030, this percentage will increase to 40%, and then to 50% in 2040. The fastest growing segment of the population is Hispanic, which eclipsed the percentage of blacks in the United States in 2010. Promoting diversity requires commitment and persistence in recruiting, mentoring, removing glass ceilings in job promotion, and membership on corporate boards of directors. In addition, discrimination lawsuits cost businesses a lot of money. For example, Denny's and Shoney's paid well over $100 million in damages, and Coca-Cola paid $192 million. When a controversy over discrimination at Texaco surfaced, the value of its stock dropped $500 million. Promoting diversity comes down to commitment, focus, and persistence, as well as developing an explicit and consistent diversity philosophy. Holding managers accountable for making it part of their operational practices, including hiring, mentoring, executive bonus systems, and buying from minority vendors, is key to its success. Another concept that is part of the human resource frame is total quality management, or TQM. Successful comprehensive human resource management strategies are grounded in long-term commitment that many organizations espouse, but few accomplish. An example of a comprehensive strategy that combines structural and human resource frames is total quality management. Deming and others, including Jurin, Crosby, and Ishikawa, emphasize workforce involvement, participation, and teamwork as essential elements of TQM. Hackman and Wageman summarized 4 core assumptions of TQM, including 1. High quality is actually cheaper than low quality. 2. People want to do good work. 3. Quality problems are cross-functional. And 4. Top management is responsible for making it all work and achieving quality. New United Motors Manufacturing Incorporated provides an example of an integrated approach to TQM. It's a joint venture between General Motors and Toyota and illustrates how a poor-performing automobile manufacturing plant can become a high-performing one, using a comprehensive HR philosophy. There are no managers, no supervisors, only team members. It combined creative human resource management with demanding work standards and produced a high-quality product at low cost. Transplanting the idea sometimes worked. When it didn't, it was usually because it was implemented in a piecemeal fashion. A key to any successful HR program is training and organizational development. As I mentioned previously, you're only as good as the people in your organization. In a global economy, most organizations must adapt to rapidly changing circumstances and thus have a compelling reason to build employee capacity to improve. Although organizational development, professional development, and other forms of training may be costly, they should be viewed as a long-term investment. Although training can play a significant role in supporting comprehensive human resource practices, organizations face several barriers, including 1. Management reluctance. 2. It disrupts established patterns and relationships with subordinates. And 3. Managers often lack communication and interpersonal skills to make it work. Let's take a look at training and organizational development. Despite the reluctance of managers to implement comprehensive human resource practices, the field is on solid ground and has built the tools needed to support these efforts, including group interventions, the use of survey feedback, and principles of organizational development. Group interventions. During the 1930s and 40s, Kurt Lewin advanced a novel and provocative idea that organizational change efforts focus on the group rather than on the individual. It stimulated the development of training, or T groups, that lay a foundation for a large array of workshops and training activities that are now a standard element in organizational life. Survey feedback. In the late 1940s, researchers developed surveys that measured patterns of human behavior, including motivation, communication, organizational climate, and leadership styles. For example, Rensis Lickert, who founded the Survey Research Center at the University of Michigan, found that employee-centered supervisors typically managed higher-performing units than job-centered supervisors. Survey research and feedback paved the way for organizational improvement. A variant of this approach is the current use of the 360 feedback in how a supervisor is seen by subordinates, peers, and superiors. Organizational development. OD continued to evolve since its early beginnings in the 1930s and its development during the 1950s and 60s. Today, OD has expanded in scope and applications and has become a standard feature of organizational adaptation and improvement through community building. In conclusion, comprehensive, high-involvement management strategies may strengthen employee organizational bonds by paying well, sharing benefits, ensuring job security, promoting from within, and supporting its evolution through training and development. In addition, strategies that improve the quality of work life include participation, democracy, egalitarianism, job enrichment, teaming, and promoting diversity. In retrospect, successful corporate human resource philosophies combine structural and human resource concepts that benefit workers and the organization. In addition, the key to achieving these goals is clearly in the hands of management. In the coming years, that responsibility will fall on your shoulders, so do a good job.